Welcome to a deep dive into trend following,
Okay.
that investment strategy that's been quietly making fortunes for decades.
Right.
And we're diving into excerpts from Michael Covel's updated edition of Trend Following,
Okay.
which is packed with wisdom from legendary traders.
Yeah.
Um, the forward of the book had this really interesting comparison.
Yeah.
It talked about those driver looked but failed to see accidents where someone crashes right into something
Oh,
obvious.
yeah.
And the author connects this to investors missing clear market trends.
That's a great analogy. I think a lot of people miss out on that.
Right. So my first question is, what exactly ISAS trend following?
Yeah.
Is it as simple as it sounds?
At its core, it really is about reacting to what the market is doing.
Okay.
Right now, we look at price movements.
Okay.
And we're going to ride that wave up or down.
Okay.
Instead of trying to predict the future.
So it's not about hunkering down and studying company fundamentals or poring over news headlines.
Exactly. Those can be helpful. But for a trend follower, the most important information is already baked into the price.
Oh, okay.
Think of it like this price reflects the collective wisdom
Yeah.
and even the folly of everyone in the market.
Okay, so it's a reactive approach, purely data-driven.
Right.
How does that differ from what most people think of as technical analysis? I picture those complicated charts with tons of indicators.
Yeah, trend followers use charts too.
Okay,
But we're not trying to decipher some secret code to predict the future.
got it.
Trend following is a specific type of technical analysis
Okay.
that focuses on identifying and reacting to sustained price movements.
So the key word here is sustained.
The key word here is sustained, yes.
So you're not jumping in and out of positions based on every little price fluctuation?
No, not at all.
Yeah.
It's about identifying a solid trend and riding it until it shows signs of reversing.
Got it. Now, the book features interviews with some legendary trend followers.
Right.
Ed Seykota, David Harding, Bill Dunn,
All great.
each one with their unique stories and approaches.
Right. What stood out to you about these individuals?
Well, what's fascinating is that they're all incredibly disciplined.
Okay.
Take Ed Seykota, for example.
Yeah.
There's this story about him buying sugar contracts right at the market peak.
Oh, wow.
Most people would see that as a terrible move,
Right.
but it just highlights his unwavering commitment to his system.
Wow.
He trusts his signals, even when they seem counterintuitive.
It's like he's got this inner peace because he's not second-guessing himself.
Right.
He's got a plan, and he sticks to it.
That's right. And then there's David Harding.
Okay.
He talks about being comfortable with shades of gray when it comes to the market.
Interesting.
He knows there's no such thing as absolute certainty
Yeah.
and embraces that ambiguity.
Okay.
It goes against our natural desire for clear-cut answers,
Right.
especially when it comes to money.
It's almost like they're Zen masters of investing.
That's right.
And then you have Bill Dunn, whose system is described as so simple that his son said it could be run on the back of an envelope. I love that.
I think that speaks to the elegance of trend following. It doesn't have to be overly complicated to be effective.
Doesn't at all.
Okay, I'm starting to see why these guys are legends.
Right.
But before we go further, let's get back to basics.
Okay.
Why is price the cornerstone of trend following?
Sure.
Why is it more important than, say, analyzing a company's financial statements?
Well, what's fascinating is that price is the ultimate truth teller.
Okay.
It reflects all the known information, all the hopes and fears
Yeah.
of everyone in the market.
Okay.
At any given moment, it's like the heartbeat of the market.
I like that.
By focusing on price,
Okay.
you're essentially tapping into the collective intelligence or lack thereof of all market participants.
So it's not that fundamentals are irrelevant.
Right.
They're just incorporated into the price already, along with everything else.
Exactly. Trying to outsmart the market by predicting what news or fundamentals might do to the price
Okay.
is often a lot less effective than simply reacting to what the price is doing.
That's a real shift in thinking, isn't it?
It is.
Instead of trying to predict the future, you're embracing the present reality of the market.
100%. That is one of the core principles of trend following.
Oh.
We accept that the future is uncertain
Yeah.
and instead focus on capitalizing on the trends that are playing out right now.
Okay, I'm starting to get the logic here,
Yeah.
but let's talk about what trend followers are actually aiming for. What are they trying to achieve in the market?
Well, trend followers focus on absolute returns.
Okay.
So instead of trying to beat a benchmark like the S&P 500,
Yeah.
our goal is to make as much money as possible,
Okay.
regardless of what the broader market is doing.
So you're not trying to be better than average. You're playing a different game altogether.
That's right. We're not interested in relative performance.
Okay.
We want to make money, period.
I have to ask, most people see market volatility as a risk,
Hmm.
but it seems like trend followers view it differently.
You're right. We actually see volatility as an opportunity.
Yeah.
Remember, we're not trying to predict the market.
Right.
We're riding the waves.
Yeah.
And bigger waves mean more potential for profit.
So instead of fearing those big swings,
Yeah.
you're trying to harness them for your benefit.
That's right. But of course, volatility can also lead to drawdowns.
Okay.
Those periods where your investments are losing value.
Right, those dips in the chart, everyone hates them.
Aye.
But from what I'm gathering, trend followers have a different perspective on drawdowns, too.
We understand that they're part of the process.
Okay.
If we're riding the waves,
Yeah.
some of them are going to be heading down.
Right.
The key is to have a robust risk management strategy in place so you can weather those storms and come out on the other side.
The book uses a great visual analogy for this, the Dunn drawdown chart.
Yeah.
It shows these peaks and valleys, and the valleys are filled with water.
Right.
And as the chart progresses, the water level rises and falls, representing the ups and downs of the investment.
Yeah, it's a powerful way to visualize those drawdowns. It helps us understand that even during periods of loss, recovery is not only possible, but highly likely if you're managing your risk effectively.
Okay, so trend followers are comfortable with volatility. They're not afraid of drawdowns,
Right.
and they're focused on absolute returns. It's a very different way of approaching the market than what most people are used to.
Absolutely. It's a contrarian approach in many ways.
Speaking of contrarian, there's another concept in the book that might be hard for some to grasp.
Okay.
It's the idea of trading being a zero-sum game.
Right. It can be a bit uncomfortable to accept,
Yeah.
but it's the reality of the markets. For someone to win, someone else must lose.
Meaning your profits are often coming from someone else's losses.
Exactly. And I think understanding this concept helps trend followers avoid emotional pitfalls.
Okay.
We're not trying to be everyone's friend in the market.
Right.
We're focused on executing our strategy, and we understand that our wins will often be a result of someone else's misjudgment or emotional decision-making.
It's a stark reality, but it does highlight the importance of having a clear strategy and sticking to it, even when things get emotional.
Absolutely.
Okay. I think this is a good place to pause for now. We've laid the groundwork.
Yeah.
Understanding what trend following is all about, how it differs from other approaches,
Right.
and the mindset it requires.
Yeah, good foundation.
And when we come back, we can delve into some more specific aspects of trend following, the tools, the techniques, and perhaps even address some of the skepticism surrounding it.
Absolutely.
All right, we're back and ready to dive deeper into the mechanics of trend following.
Okay.
Before the break, we touched on how trend followers are comfortable with volatility, even drawdowns.
Right.
But they're not just reckless gamblers, right?
You got it.
There's a method to the madness.
Oh, yeah. Trend following is all about calculated risk-taking.
Okay.
It's a very systematized approach with rigorous risk management at its core.
Okay, so let's unpack that.
Yeah.
Can you give me a sense of how trend followers manage risk? What are some of their go-to tools?
Well, one of the most important tools is the stop-loss order.
Okay.
It's basically an order that automatically sells an asset
Okay.
if it falls below a predetermined price.
Okay.
It's kind of like a safety net to limit losses on any given trade.
So it's like setting a boundary. If
Yeah.
the price drops this far, I'm out no matter what.
Precisely. And it helps us remove emotion from the decision-making process.
Yeah.
We don't get caught holding onto a losing position,
Right.
hoping it will turn around.
I'm starting to see how this aligns with the psychological aspects of trend following, being disciplined
Yes.
and detaching from those emotional urges.
Absolutely.
Yeah.
But stop-loss orders aren't just about limiting losses.
Okay.
They're also about capital preservation.
Okay.
Like that old saying, it's not about how much you make, it's about how much you keep.
Yeah. And preserving your capital allows you to stay in the game
Right.
and catch those big trends when they emerge.
Get it.
Now, another crucial aspect of risk management is position sizing.
Yes.
It's about determining how much capital to allocate to each trade based on your overall risk tolerance.
Right. So it's not just buy or sell. It's also how much do I buy or sell.
Exactly.
Right. And a good trend follower will adjust their position size based on the market's volatility.
Okay.
In a calm market, they might take larger positions.
Okay.
But if things are getting choppy, they'll scale back to limit potential losses.
So it's like a surfer adjusting their stance on the board depending on the size of the wave.
That's a great analogy. And then, of course, there's diversification,
Okay.
right? Instead of putting all your eggs in one basket,
Mm-hmm.
we spread our risk across different markets and asset classes.
So if one market is tanking, another one might be booming, and that helps smooth out those inevitable ups and downs.
That's the idea. Now, I know we briefly mentioned the capitalism distribution chart earlier,
Okay.
and I think it deserves a closer look because it really highlights the power of trend following when applied to stocks.
Okay, I'm all ears. Break it down for me. What makes this chart so special?
This chart analyzes the distribution of returns,
Okay.
specifically for trend following strategies applied to stocks.
Okay.
What's intriguing is that it reveals a pattern
Yeah.
we don't typically see with traditional stock investing.
What kind of pattern?
It's called a right-skewed distribution.
Okay.
Most of the returns cluster around a central point.
Okay.
But there's this long tail of positive outliers representing those massive wins that trend followers aim for.
So it's not just about making small, consistent profits.
Right.
It's about having the potential for those occasional home runs that can really boost your overall returns.
It goes back to that Babe Ruth analogy. You're willing to strike out a few times if it means having the chance to hit a grand slam.
It's a high-risk, high-reward kind of game.
You could say that, but remember, we're managing that risk carefully.
Right. Okay, I'm
Yeah.
starting to see the appeal. But let's address the elephant in the room. There are plenty of skeptics out there who question the sustainability of trend following.
Sure.
They argue that as more people catch on,
Yeah.
the strategy will become less effective.
That's a valid concern.
Okay.
But trend following has a long history of success.
Yeah.
And there are a few key reasons why I believe it will continue to work.
I'm all ears.
First off, human behavior doesn't change that easily.
Okay.
Fear and greed are powerful forces in the market,
Right.
and they've been driving trends for centuries.
Yeah.
I don't see that changing anytime soon.
So even if everyone knew about trend following, those emotional biases would still be creating opportunities.
Exactly. And another reason is that the majority of investors still cling to that buy and hold mentality,
Okay.
especially when it comes to stocks. They're hesitant to sell when the market drops.
Right.
And that creates those extended downtrends that trend followers can capitalize on.
That's a great point. It creates an imbalance in the market that trend followers are perfectly positioned to exploit. But let's be honest, trend following isn't for everyone, is it?
It's not.
It takes a certain type of person to succeed with this approach.
You're absolutely right. It's not a passive investment strategy.
Okay.
It requires discipline, patience, and a willingness to embrace uncertainty.
And it probably helps if you're not easily spooked by market swings.
Yeah, definitely. The book actually talks about certain personality traits that are common among successful trend followers.
Okay.
For example, they tend to be highly conscientious,
Okay.
meaning they're organized, disciplined, and rule-oriented.
So they're not making emotional decisions. They're sticking to their system.
That's right. And they also tend to be low in neuroticism,
Okay.
meaning they're not easily rattled by stress or market fluctuations.
They're the calm in the storm.
That's it.
But what about intuition? Is there any room for gut feeling
Yeah,
in a data-driven approach like trend following?
that's a good question.
Yeah.
While trend following as systematic experience definitely plays a role,
Okay.
over time you develop a feel for the market, an intuition for when a trend is likely to continue or reverse.
So it's not just about blindly following the signals. There's an art to it as well.
You could say that it's about recognizing subtle patterns
Okay.
and nuances that might not be immediately obvious in the raw data.
So it's a blend of art and science, data and intuition.
Exactly.
But let's get back to the practical side of things.
Okay.
If someone wanted to start exploring trend following, where would they even begin?
Well, the first step is education.
Okay.
Reading books like Trend Following,
Yeah.
studying market history,
Okay.
and learning about different technical indicators is essential.
So there's homework involved. It's
Yeah.
not something you can just jump into without a solid understanding of the basics.
Absolutely not. You
Okay.
need to build a solid foundation
Okay.
before you start risking your capital.
Okay. And once you have that foundation, what's the next step?
The next step is to develop a trading system
Okay.
that fits your personality, your risk tolerance,
Okay.
and investment goals.
Got it.
There's no one-size-fits-all approach.
So you're not just copying someone else's system, you're creating something that works for you.
Exactly. And that system should include clear rules for entry-exit and, of course, risk management.
So you're defining those boundaries up front. I'll buy here, I'll sell there, and I'll cut my losses if the price drops below this level.
Right. It takes the emotion out of the equation and allows you to make rational decisions even when the market is going crazy.
Now, let's talk about some of the specific tools and resources that are available to help people learn more about trend following.
Sure.
You mentioned trend following as a great starting point.
Yeah.
Are there any other books, websites, or software programs that you recommend?
Absolutely. The Turtle Trader by Michael Covel is another great read.
Okay.
It tells the true story of a group of ordinary people
Yeah.
who are trained to become successful trend followers.
Oh, yeah, I've heard about that. The legendary turtle experiment.
Right.
It's amazing to think that anyone can be taught to trade this way.
It really is. It proves that trend following is a skill that can be learned, not some innate talent.
Now, what about websites or online resources?
TurtleTrader.com is a great resource with articles, interviews, and forums dedicated to trend following.
Okay.
And trendfollowing.com, run by Michael Covel himself, is another excellent source of information.
So there's a whole community of trend followers out there sharing knowledge and supporting each other.
That's right. And as for software, there are programs like TradeStation NinjaTrader and multi-charts that can be used to backtest trading systems and execute trades.
So those are for the more hands-on technical side of things.
Exactly. They allow you to test your ideas,
Okay.
see how your system would have performed historically,
Yeah.
and automate your trading.
It sounds like there are plenty of resources available for anyone who's serious about exploring trend following.
There are.
But it's important to emphasize that this is not a get-rich-quick scheme, right?
Absolutely not. Trend following takes time, effort, and a willingness to learn and adapt.
And it probably requires a fair amount of resilience.
Mhm.
I imagine there are plenty of ups and downs along the way.
Oh, yeah. But for those who are willing to put in the work and stick with it,
Yeah.
trend following can be a rewarding and potentially very profitable approach to investing.
Now, I want to shift gears a bit and talk about something that often gets overlooked in discussions about investing.
Right.
The importance of having the right mindset.
Right. I think that's a crucial aspect of trend following.
Yeah.
It's not just about having the right system.
Right.
It's about having the right mental and emotional approach.
So it's about developing the right psychology for trading.
Exactly. Trend following can be psychologically challenging.
Okay.
You have to be able to detach from your emotions,
Yeah.
accept losses as part of the process, and stick to your system even when things are going against you.
It sounds almost like a form of mental training.
It is, in a way, you're training yourself to overcome those ingrained biases and emotional reactions that can sabotage your trading.
The book talks about the importance of developing emotional intelligence, self-awareness, and the ability to manage your emotions.
Yeah.
Why are these traits so important for trend followers?
Well, as we discussed earlier, most people are naturally risk-averse.
Yeah.
They panic when markets drop and get greedy when markets rise.
Right.
Those emotions can lead to impulsive decisions that often end badly.
So you need to be able to control those impulses and stick to your plan even when it feels uncomfortable.
Exactly.
Yeah.
Trend followers have to be able to buy when everyone else is selling and sell when everyone else is buying.
Yeah.
That goes against our natural instincts.
It's a contrarian mindset.
It is, and it requires a high level of self-awareness.
Okay.
You need to understand your own emotional triggers and develop strategies to manage them.
The book talks about a concept called prospect theory.
Yeah.
The idea that we feel the pain of a loss more strongly than the pleasure of an equivalent gain.
That's a powerful concept,
Mhm.
and it explains why so many investors make irrational decisions.
Yeah.
They hold on to losing positions for too long, hoping they'll come back,
Right.
and they sell winning positions too early, fearing they'll give back their gains,
So trend followers have to learn to overcome that loss aversion.
and detach themselves from those emotional responses.
Exactly. It's about viewing the market objectively, focusing on the data and your system, not on your own emotional reactions.
Now, earlier you mentioned that intuition can play a role in trend following.
Right.
But how do you reconcile that with a data-driven approach? Isn't it a bit of contradiction?
It's a delicate balance.
Okay.
Intuition in this context isn't about making wild guesses
Right.
or following your gut blindly.
Okay.
It's about recognizing subtle patterns and nuances that might not be immediately obvious in the raw data.
So it's like a sixth sense that develops over time as you gain experience in the market.
You could say that, and this intuition can help you make adjustments to your system,
Okay.
fine-tune your entries and exits,
Yeah.
and ultimately improve your overall performance.
So it's not about choosing between data and intuition.
Right.
It's about integrating the two.
Exactly. You're using data to inform your intuition and intuition to enhance your interpretation of the data. Okay, so we've talked about the psychology of trend following, the importance of risk management,
Right.
and the tools and resources that are available to help people get started.
Yeah.
But there are still some common misconceptions about trend following that I think we need to address.
I agree. There are a lot of myths and misunderstandings out there.
One of the most common ones is that trend following is somehow manipulative
Right.
or detrimental to the markets.
Yeah, some people believe that trend followers are the ones causing market crashes.
Yeah.
Or manipulating prices for their own benefit.
But the reality is trend followers are simply participants in the market, just like any other investor, right?
Exactly. We're not creating trends, we're reacting to them.
The book uses a great analogy. It compares trend followers to surfers.
Yeah.
They're not creating the waves, they're riding them.
I love that analogy.
Yeah.
It's a perfect way to put it. We're simply riding the waves of market sentiment, whether they're going up or down.
Another misconception is that trend following is too risky or
Yeah.
too volatile for the average investor.
That's a common concern. And it's true that trend following can involve significant drawdowns. But as we've discussed, those drawdowns are a natural part of the process.
Yeah.
And can be managed effectively with proper risk management techniques.
So it's not about avoiding risk altogether.
Right.
It's about understanding and managing it.
Exactly. And remember, trend followers are obsessed with risk management.
Right.
We're constantly thinking about ways to protect our capital and minimize losses.
Now, I want to touch on something we discussed earlier, the sustainability of trend following.
Sure.
Some skeptics argue that as more people become aware of this approach,
Right.
it will become less effective.
Yeah.
What are your thoughts on that?
I think it's a valid concern, but I'm not convinced it's a fatal flaw.
Okay.
There are a few key reasons why I believe trend following will continue to work.
I'm curious to hear your perspective.
Well, first off, human behavior is a powerful force in the market.
Okay.
And those patterns of behavior tend to persist, regardless of how many people are aware of them.
So even if everyone knew about trend following,
Right.
those emotional biases would still be driving the markets.
Exactly. Fear and greed are timeless emotions.
Yeah,
And they're not going away anytime soon.
that's a good point. What else?
Another reason is that the majority of investors still favor buy and hold strategies, especially when it comes to stocks.
Okay.
They're hesitant to sell when the market drops, and that creates those extended downtrends that trend followers can capitalize on.
So trend followers are benefiting from the reluctance of others to adapt to changing market conditions.
Exactly, and I think that dynamic is likely to continue for the foreseeable future.
So trend following isn't some fad that's going to disappear overnight. It's a strategy with a solid foundation in the realities of market behavior.
Right, and it's been proven to work over long periods of time through all sorts of market conditions.
Now, I want to shift gears a bit and talk about something that's often overlooked in discussions about investing.
Okay.
The importance of having the right mindset.
I think that's a crucial aspect of trend following. It's not just about having the right system.
Okay.
It's about having the right mental and emotional approach.
So it's about developing the right psychology for trading.
Exactly. Trend following can be psychologically challenging.
Yeah.
You have to be able to detach from your emotions, accept losses as part of the process, and stick to your system even when things are going against you.
It sounds almost like a form of mental training.
It is.
Yeah.
In a way, you're training yourself to overcome those ingrained biases and emotional reactions that can sabotage your trading.
The book talks about the importance of developing emotional intelligence, self-awareness, and the ability to manage your emotions. Why are these traits so important for trend followers?
Because trend following, by its very nature, challenges many of our ingrained biases and emotional responses to market fluctuations.
Okay.
It requires a certain level of mental toughness to succeed.
Can you give me an example?
Well, one of the most common biases is what's called confirmation bias.
Okay.
We tend to seek out information that confirms our existing beliefs, even if those beliefs are wrong.
So if we're convinced a certain stock is going to the moon, we might ignore all the warning signs and red flags.
Right. We're blinded by our own optimism.
Yeah.
And trend followers have to be able to overcome that bias and look at the market objectively.
They need to be willing to change their minds when the data suggests they're wrong, even if it means admitting they were wrong.
It's about being humble, recognizing that you don't have all the answers.
Exactly. And it's about being disciplined enough to stick to your system, even when your gut is telling you something different.
Now, another bias the book mentions is recency bias, the tendency to give more weight to recent events than to past events.
Yeah, that's a powerful one, and it can really trip up investors. We tend to overreact to the latest news or market movement, even if it's just a blip on the radar.
So we might see a big drop in the market and assume it's the start of a crash,
Right.
even though history tells us that markets tend to recover over time, right? Trend followers have to be able to take a longer-term view and not get caught up in the short-term noise. They have to understand that markets move in cycles, and what goes down will eventually come back up.
So it's about having a historical perspective and recognizing that the market is always in flux.
Exactly. And it's about having the patience and the discipline to ride out those inevitable ups and downs.
Okay, so we've talked about some of the cognitive biases that can affect our trading, but what about the emotional side of things?
Yeah.
How do trend followers manage their emotions when the market gets volatile?
Well, first and foremost, they understand that emotions are a natural part of trading.
Okay.
Everyone feels fear and greed. It's part of being human.
So it's not about suppressing those emotions altogether, it's about learning to manage them.
Exactly. Trend followers had developed strategies for dealing with those emotions so they don't let them cloud their judgment.
What are some of those strategies?
One of the most important things is to have a trading plan and stick to it.
Okay.
That takes the emotion out of the equation.
So you're not making decisions on the fly based on how you're feeling at that moment.
Right, you've already made those decisions in advance. So when the market gets crazy, you don't have to think. You just execute your plan.
And that helps prevent you from making impulsive decisions that you might regret later.
Exactly. Another strategy is to focus on the process, not the outcome.
What do you mean by that?
It means focusing on following your system, making good trades, and managing your risk, rather than obsessing over your profits and losses.
So it's about taking a long-term view and not getting caught up in the day-to-day fluctuations of the market.
Right. And it's about understanding that you can't control the market, but you can control your own actions.
That's a powerful concept. It's about taking responsibility for your own trading and not blaming the market for your losses.
Exactly. And I think another important strategy is to have a support system.
You mean talking to other traders or having a mentor?
Right. It's helpful to have someone to talk to who understands the challenges of trading and can offer support and guidance.
So it's not a solitary pursuit, it's something you can do with others.
That's right. And I think having that support system can make a big difference, especially when you're going through a tough time in the market.
Now, as we wrap up this deep dive, I want to leave our listeners with a few key takeaways. What are the most important things to remember about trend following?
Well, I think the most important thing is to understand that trend following is a legitimate investment approach with a long history of success. It's not some fringe theory or get-rich-quick scheme.
It's a proven strategy that's been used by some of the most successful traders in the world.
Exactly. And I think another important takeaway is that trend following is not for everyone. It requires a certain mindset, a willingness to embrace uncertainty, and a commitment to discipline and risk management.
It's not a passive investment strategy. It requires active participation and ongoing learning.
Right. And I think the final takeaway is that trend following is a journey, not a destination. It's about constantly refining your knowledge, your system, and your mindset.
It's about adapting to changing market conditions and always striving to improve your trading.
Exactly. And for those who are willing to put in the work, trend following can be a rewarding and potentially very profitable approach to investing.
Well, I think that's a great place to leave it. Thanks for joining us on this deep dive into the world of trend following. We hope you found it insightful and informative. And remember, as Mark Rozipchinski, president of John W. Henry and Company, said, our response to this environment has to be disciplined. We must be willing to close or change positions without ambiguity if called for risk management is especially opportune at this time. Until next time, happy investing.